Welcome back to the podcast. I'm Kate Wilson, and this week I'm all on my own. No co-host this week. Anna is off on her honeymoon, so I'm holding down the fort. I did a really great interview this week with Adrian Toynton, Head of Banking Solutions APAC at FIS, and we're talking about FIS's new report on core platform modernization and cloud migration, and just a really interesting chat about everything that we're seeing changing in the banking industry at the moment. Really interesting to talk about it from a different point of view and to think about the tech and the legacy tech and how banks and other financial services providers are dealing with this challenge, and what it means for the future as well. So we spoke a fair bit about what FIS sees as sort of the next stage and where we can expect the industry to go. So hope you all enjoy the podcast this week. Welcome back to the podcast. Today, I am joined by Adrian from FIS. Adrian, welcome to the podcast.
Hi, thank you very much.
Why don't you start off by telling us a little bit about yourself and about your background?
Yeah, thanks. So I look after banking for APAC. So I look after our solutions with a real big focus around core banking and digital solutions, focusing on the Asia Pacific market. So it's quite a broad remit, but it's really around how we bring new technology to support our customers. We have a large footprint of customers across core banking, payments, cards, merchant acquisitions, capital markets. My focus is really around the core banking area and how we bring kind of new technology into the overall kind of banking ecosystem for a lot of our existing customers and new customers.
And for those listeners who might not know that much about FIS, do you want to give us a little bit of an overview of what FIS does as well? Yeah,
so we're branded as the biggest global fintech, so we're about 55,000 people globally. Headquarters are in Jacksonville in the US. Our business is divided up into three main areas. So there's the banking business, which is core banking, cards and payment processing. There is the capital markets part of the business, so that's really, again, all of the processes within banks around things like liquidity management, treasury, and then the third part of the business is our merchant acquisition business, which is the WorldPay business that we acquired a couple of years ago.
Great, and let's jump into some questions. So,
cool.
We're talking about technology and banking. Banking has very much become a technology business, and we've seen really through the last couple of years, through the pandemic, just this rapid acceleration in terms of digital banking, the need of a digital transformation. Beyond the pandemic, what are the key market drivers, do you think, of the need for banks to transform?
I mean, the bulk of it's led by customer expectations, and just thinking about the pandemic. A lot of the banks that I talk to regularly have kind of accelerated 3 to 4 years worth of digital enablement to serve their customers better into kind of 6 months. And so how quickly they can bring those services to market is critical, because customers' expectations, even pre-pandemic, were moving more to a digital focus, with just focusing on consuming services via your phone rather than that's all accelerated with COVID, and really the provision of those services is now much broader. So customers don't want to consume products anymore; they want to consume things that are individualized to them, right? So that requires the bank to have a much greater understanding of that customer and the relationship that customer has, with that organization. I mean, that's critical, right? Because at the end of the day, competition is extremely fierce. You have things like open banking frameworks that are prevalent in that are legally now prescribed, in certain geographies like the UK and Europe and Australia, where actually somebody can walk into a branch of a competitor and say, I'd like you to transfer all of my accounts to you. And because of that open banking framework, where essentially they fire off a request to your host bank, the ability for you to just lift and shift your whole banking relationship is there now and enabled through technology. So banks have got to be really careful around protecting the investment they've got in the customer and offering them the services they want, right? So I mean that's the critical piece, and the technology that they have to underpin that, you know, that's moving rapidly from what you would call like legacy mainframe type technology to more open, you know, cloud-based systems that actually enable that agility to be able to move to and constantly evolve to offer your customers what they want. I mean, that's the critical move, and that's really the kind of. But at the end of the day, it's all being driven by what customers want, and the banks need to focus on providing those services.
What customers want has changed so much over the last couple of years as well, and yeah, as you said, this sort of rapid shift in customers' expectations and the need for personalization is something that's about quite a lot at the moment.
Yeah, I mean, nobody wants like a deposit account anymore, right? You want a deposit account that's linked to a retailer and it's linked to a telco. It enables you to plan for holidays or be able to kind of partition your money up and say, you know, part of that money is for my living and part of that money is for my spending. And some of this, you know, together with things, yeah, just simple things like, you know, gamification and how products are delivered. You have to make them now unique to the customer. And if you don't do that, I mean, particularly with, you know, the younger generation, you know, they get bored very quickly, right? So ultimately you have to drive the kind of services and products you offer. We are aiming at the markets that you want, you know, that you want them to consume. So it's critical that you continually evolve in that way.
Absolutely. So with you know, transformation and the need to move to the cloud, that's been something that's been on banks' agendas for some time now. Why do you think there is a sort of growing sense of urgency to accelerate that digitalisation at the moment?
I mean, it's really because if you look at how banking systems have evolved, and particularly the core systems that process customers and transactions and products and all of the pricing and all of the integrations and interfaces and things that sit around that. I mean, historically, those systems, and probably the reason we call them legacy, is that they've built and built and built over a period of time. And while they're very good at delivering what they do, the flexibility within them is very small, right? So ultimately, if you need to make a change, because they're so broad in their scope, a change you make over here affects 10 things over here. And so the way that new systems are architected in that they're componentized, so it's really discrete functionality that's built in components. So it's a discrete functionality around, say, a deposit account or a payment or a pricing module, or how to manage your customers, or all things like that. And they're exposed in a new way with sort of open interfaces using APIs. That basically means you can change things really quickly. And the premise of new systems now is it's all around configuration, not customization. You know? So these services are traditionally now deployed on the cloud. They're deployed as software as a service. So by doing that, the banks are consuming, like, the application level, if you like, you know, so they're just consuming that application piece. So they're focusing on the outcome rather than what sits behind the outcome. So therefore, they don't have to worry about how it works, just that it works. And the provision of those things and how you kind of change those things, as I said, it's configuration, not customization now. So that gives you as a bank the ability to be able to continually evolve what you're doing really, really quickly. And because it's delivered like in a real discrete way technically, you can change things without having to worry that it's going to affect, you know, knock-on effects, you know, all within the bank. And I think that's driving a lot of that. I mean, inherently, the cloud, moving to things like cloud, is you're moving from that very heavy CapEx model where we're investment in hardware and infrastructure, but to more of a kind of OpEx model where you're kind of paying as you go, pay as you use. And again, that's really attractive because then your ability to scale, you know, you're basically paying as you scale, but if you're not scaling, you're not paying. And so ultimately it's really it's that kind of growth mindset that you can start to sort of plug into your technology. So,
and then I guess
sorry, that was a long answer.
No. No, I think the flip to that, of course, is what's stopping banks, what's holding them back from cloud adoption.
I think you start with when you're thinking about cloud and new technology, it's less about technology and more about culture. So it's culturally within the organization. How do you adapt to something? And I guess the simple way, I mean, the way that maybe you've always done a particular process, maybe it goes 1, 2, 3, 4, 5. The fact that process could go 5, 4, 3, 2, 1 and deliver you the same outcome, that's quite hard culturally to necessarily adapt to. And the other thing with cloud as well is that a lot of systems on cloud now are delivered as that software as a service. So if you kind of use the metaphor of a car, you're driving the car, but now you're driving the car and you can't look under the bonnet, right? And for some organizations, that's scary, right? It's a scary concept that you don't know how it works. It works, but you don't know how it works. In the same way as your mobile phone, right? You're looking at the app. You don't really know how the operating system works, and so that's a cultural change in terms of how technology is used and deployed, and the fact that you're kind of outsourcing some of that responsibility. I mean, that's what you're doing. And I think, and the other part of that is that the whole idea of configuration versus customization. Again, it's looking, and it requires more of a business mindset to think about how do I take all of these parameters and options and build them to deliver the outcome that I want, rather than I'm going in there and coding to deliver the outcome I want. And that's a very different mindset. So I mean, culture is definitely there. I mean, the other one is the speed of change in cloud and technology is so fast, right? And what's good today is not necessarily good tomorrow. But really, again, banks having to come to terms with how they consume that and how they best deploy it, and the kind of systems they deploy it for. So initially in the cloud world, it was maybe more focused on things like data and analytics and customer relationship and things like that. So almost the peripheral systems of the bank. Now the banks are going to that next level and looking at the core engines of the bank and how they would consume those on cloud. And that inevitably raises questions around things like security and performance and things, because these systems cannot be off. They can never go down. But to mitigate that, the technology is rising to the challenge. But again, it's a mindset of, can I let essentially somebody run the heart and lungs of my bank for me? The digital banks are proving it can be done. I mean, if you look across the whole of the APAC region, as the regulators and the central banks in each country have given more and more digital bank licenses, all of those digital banks have come to market on cloud. Right? And because they've come to market on cloud because it's really quick, and actually somebody's taking the worry of running the service away, and so they can focus on the important things like customers and like the products that they want. And so now if you like, the incumbent banks are saying, oh wow, we need to respond to that, right? And how do we respond to that with what we currently have? And in some ways they can respond just by bolting bits onto what they currently have, but eventually you get to a point where you can't do that anymore. And then eventually, within the core industry, they call it hollowing out the core. And so you're basically just taking pieces out and trying to modernize them piece by piece. But eventually you get to a point where you can hollow no more, and you actually need to fundamentally change how your system is architected. And that realization is coming to a lot of the banks. And we're working with a lot of the banks globally now that are moving to those cloud-based systems. And maybe they start with a digital bank to prove out that technology, or even a brand new technology stack. But fundamentally what they're trying to do is prove the technology works for a small subset of their customers. And then once they're happy it works, then the idea is to then transition the rest of the bank onto that platform.
It's an interesting point because we think a lot about consumers and the pace of change that we've seen in terms of how consumers do things and what their expectations are. It's also thinking about the fact that there are people who are working in banks who have to go through a transformation and a change in terms of what they expect too, right?
And a lot of people have worked in banks for many years. I mean, I've worked in banking for over 30 years, and a lot of the banks, in APAC and in Australia, people, there's a lot of committed people that have been in there for 20, 30, 40 years. And we're working with a bank at the moment who's looking at a transformation of core. And one of the people within the bank said, I was there when we put our first system in, and I want to be in there when we turn it off, right? so they're heavily wedded to their technology, but they're also aware that they need to change as well. So it's a really good process, but it's definitely led kind of culturally top down. So if within the organisations, the right senior management who understand that it's a cultural thing, once they get that immediately, then actually the way that cascades through the organisation is I wouldn't say easy, but it's a simpler process.
Everyone has to be pushing in the same direction.
Exactly. Yeah.
So there's a lot of different methods of transformation out there, and it's obviously hard for banks to decide what's best, what's going to work best for themselves and culturally and for their customers as well. What are the options that are out there for banks? What are the benefits and risks of each of them, do you think?
I mean, historically, the approach was big bang, right? And which would essentially mean you're building a new system and then you do what it says on the tin, right? You basically lift and shift all of your customers and accounts at one point. I mean, that has inherently been the way. That is increasingly looked at as being, it's expensive, it's risky. There are obviously major issues if it doesn't go well. But it's still a strategy, and again, if you do all of your homework beforehand, it can still work. But increasingly, banks are looking to not do that, and so the approach around setting up a new stack on the side, a new identity, and actually building into that new identity, whether it be a new digital bank, or whether it be a partnership, or whether it be just, to be honest, just proving the new technology on the side first, in a kind of sandbox environment. It's not customer facing. I mean, that's increasingly the approach, and then as you do that, once you get comfortable and you've reached those levels of kind of technical and functional parity, that you're happy that it works how it's meant to work, then you start to migrate your customers over, or you may just leave that as a new digital bank on the side. I mean, the other approach is that progressive phased approach that I mentioned before, which is that hollowing out the core. So your idea is you've got new technology over here and older technology over here, and you just start to replace bits. So you may say, okay, here's my systems for supporting my deposit accounts. So I'm going to turn on the new function, and I'm going to turn off that function, and I'm going to make the new function work with the old function. I mean, it's a tried and tested approach. It is an approach that's quite heavy from an integration perspective, and so a lot of work that you need to do before you start to see real benefit. It doesn't change the benefit of that approach. It's really depending on the outcomes that you're seeking. And then the other approach is this build and migrate, which I mentioned before, and I think some of my American colleagues call it the sidecar approach, where you essentially bolt on a sidecar to your existing bank, and then you build out into that until you're happy, and then that becomes your new bank. And that gives you benefits of it gives you the benefits of to a degree, because you might get to a point where you're really happy and then you can just bring over everything really quickly, so you're not having to run two systems. But it also gives you a little bit of that progressive build, so you're building and testing, building and testing, building and testing. And at the end of the day, you want to be really confident before you start bringing over all of your customers and accounts and all of those really valuable relationships. But those are the real sort of approaches that are prevalent in the market now, and more, I think, because of the digital requirement now, and every bank is dipping its toe into the digital, into digital banking, and whether or not it's a brand new brand or whether or not it's just a particular product that is only offered, through a digital channel. So those things kind of align quite nicely to standing up that new technology on the side. Yeah,
I was curious to get your thoughts on the rise of those digital banks under the major bank brand. Is that something you think we'll see more of over the next few years?
Our short answer is definitely yes, because I think a lot of banks are using it in a way to test the market around new technology, and particularly with cloud, you can stand that product up really, really quickly. And then going back to the earlier point around customers and what customers are looking for, digital bank enables you to do things that are a bit non-traditional from a bank perspective. Let's go and link my bank account to my phone, and let's go and link it to a retailer, and let's go and link it to a petrol provider or whatever. I mean, ultimately, it's those things that you're probably not going to do that in your traditional bank infrastructure, but you are going to do that in the digital bank. And I think as all of the central banks continue to offer more digital bank licenses, we're definitely seeing. I mean, that happened in Australia a few years ago. It hasn't happened really in New Zealand yet, but if I look more broadly into the Asia Pacific region, it started in places like Hong Kong, and then it's coming through Singapore and in Indonesia and into Thailand and into Vietnam. So all of these central banks are issuing these new licenses, and if you look in Singapore, for example, you have the Grab entity, which is like Uber that have applied for a new digital banking license, right? And so that's a new player, and they've obviously got a real large existing customer base, and so banks have to look at that and go, wow, I need to respond to that. So I have to respond to that by maybe doing something different in my branding and in my approach that attracts a different customer base.
Yeah, I was part of a webinar this week where someone said fintechs are able to go after niche segments, whereas banks have to provide for everyone, so they can't always go and do something really specific that meets the needs of a target segment. But having a digital bank under your umbrella probably makes a lot of sense when you're trying to target.
I mean, there's a bank in Thailand that have launched a brand called Robinhood, and it's banking, but it's also food delivery, right? So I mean, there you go, right? I mean, that's you're probably not going to do that under your traditional bank umbrella, but under a different brand, like a different digital bank brand and approach, you can do these things, right? And that's really where the investment is going, because there's a large untapped segment of customers that want that experience and want those kind of services. So.
Yeah, who want their food and their banking all in one place.
Exactly. Yeah, exactly.
Any further predictions for the year ahead? We've spoken a lot about the transformation that's happening both on the customer side and also for banks internally. Any key predictions that you have, especially as we come out of the pandemic? What do you think we'll start to see more of over the next couple of years?
I mean, I think we'll just see a continued acceleration of digital, and as far as the services that the banks provide. I mean, that's probably an obvious statement, but I think we will just see more and more services provided away from the traditional branch format into the digital into the digital channel. So that certainly, you know, is going to happen. I think that the rise of the digital banks, it will definitely continue, but I think it will also be measured in terms of scope of some of that. I mean, so with some of the digital banks have failed or have not grown as quickly as probably what they wanted to, and I think that's because, and what that's done is it's focused those strategies on really providing very specific value and services. So I think that will definitely increase, and I think you will start to see adoption of cloud for major systems within the bank really start to take off. A lot of the banks, you know, in Australia and New Zealand are looking at this and actually moving forward on this, and in the broader Asia Pacific region, there's a lot of momentum towards moving to those cloud services. And although that won't necessarily happen immediately, those pieces of work will start. And so as those pieces of work start and those banks start to transform, you're going to see more digital brands, but you're also going to see a lot more customer focused kind of products and services that are brought to market really quickly. And I think all these things make for a really interesting market for the customers. So they're going to have a lot more choice. And so I think, yeah, banks will become more commoditized, right? In the fact that, yeah, there's often the question of, will banks exist in the future? Well, banking will definitely exist. Banks will exist, but they will have to continue to change, to adopt, to make sure that they exist, right? By providing those services. And I think that's really what we're seeing now. And COVID has driven so much of that to be a really accelerated timeline, that maybe that change was going to take 5 to 10 years. Whereas that change now has been contracted into, the accelerator for the change has been contracted into the last 2 years, and now you will see massive change really quickly over the next 2 to 3 years.
Yeah, I think that, as you said, that shift has been something we've all been talking about within the industry for a couple of years, but it looks like it's going to happen a lot faster, and we're a lot closer to starting to see that real proliferation of different options for customers.
Absolutely, yeah.
Well, thank you so much for joining us on the podcast. It was a really great conversation. Really enjoyed listening to everything that you had to talk about. Thank you so much for joining us.
Thanks, Kate. That's excellent. Thank you so much.